Well, welcome back. This is Si Wing Yi. Thanks for attending. And today's video title is Recovery. Housing recovery per the Redfin report updated today, which is Wednesday, 25th of January, 2023. So before I begin with that, I'm going to share the screen and I'm going to show the mortgage news daily on today's mortgage rate, which is 6.18%, which is came down by 0.03 basis point. So that's very, very good news. And the 30-year fixed rate mortgage for people with excellent credit for primary homeowner occupied types of loans. And as you may or may not know, we have achieve the psychological barrier of reaching below 6% mortgage rate for 30-year fixed rate mortgage for the VA loans, Veteran Administration loans, for the veterans such as myself, who have done many VA loans over the years, which is the best kind of loan there is. 0% down VA loans is getting a mere 5.82%, which is amazing. 30-year jumbo loan rate, 5.71%. 15-year fixed rate, 5.24, and 30-year FHA loan rate 5.78, and 5-1 ARM 6.15. So only two loan types, the mainstream loans, are over 6%. When and if we see the 30-year fixed rate mortgage goes below 6%, then a true psychological barrier may come down, and then we may have some very optimistic, positive feelings for a lot of American home buyers moving forward. Does that make sense? So, of course, inflation has been subsiding. The Federal Reserve have no pending meetings anytime soon on their calendar. If the inflation is subsiding and the 10-year treasury is also subsiding, that's where the mortgage rate will follow those kind of trends. So, it's nice to see, it's nice to see good news for change, because the past 9 months have not, it was not the case. I'm sure you guys agree. So, let me see what else I can show you. This article just came out from Mortgage News Daily. Mortgage rates move modestly lower. So again, that's a really, really good news. And so remain to be seen. As we all know, mortgage rates has been volatile, to say the least. And so that's what we're facing so far. And let me show you something. Let me show you the 30-year mortgage rate this past 1 year. As you can see right here, ever since October of 2022, a few months ago, where the mortgage rate was way up to 7.3%, that really freaked a lot of people out. But since October, we have seen the mortgage rates decreasing. It's trending really downward. So it's really very, very reassuring to hear that. And so remain to be seen how it's going to turn out. But so far, as we begin the first quarter of 2023, things are beginning to look up. It can't get any worse, can it? So anyway. So let's get back to the Redfin article just came out today. Fresh off the press, the housing market has started to recover. Okay, hold tight. We're not out of the woods yet. So let's do a deep dive into this article to go over the details, excuse me. All right, so Redfin said the housing market has begun to recover after hitting a low point in the second week of November. We're not out of the woods yet, but home buyers are coming off the sidelines. I like the word off the sidelines because there's so many buyers in the past few years have been staying in the sidelines. They just are very confused, very overwhelmed by a lot of conflicting information. We don't know what to believe. Yeah, we don't know what's trending. It's going to be a crash. It's going to be a correction. Or what are the mortgage rate, the recession, and the job unemployment and the job report. There's so and the war in Ukraine. It's just so many negative headlines out there. It just paralyzes a lot of people. And I do understand as humans, we can't take this. We can't take this pressure. We cannot take this. All the negativity is so hard to overcome this. So, but at the same time, I ask each and every one of you to remain positive. It's not the end of the world, and the sky is not falling. Don't think short term. I mean, short terms, we're going through some challenges, but we're gonna do well over it. You just have a long term perspective. Think the big picture. If you are in a good financial situation, you have a good stable job, you have a lot of cash reserve, if you can qualify, to buy a house or to buy a rental property, by all means, there are some opportunities. In any kind of crisis, there are always opportunities. Trust me, I've been a real estate investor for the past 30 years, and I've been through a lot of different real estate cycles, and I have consulted with thousands of mom and pop real estate investors from across the country, all over the U.S., to buy out-of-state turnkey passive cash flow investment properties, turnkey properties, and in affordable entry-level markets with good rents, good job growth, good population growth, the whole 9 yards. So if you want to learn more about it, of course, subscribe to my email newsletters on my website below you at the end of this video. Obviously, if you see value of this video, please also smash the like button and subscribe to my YouTube channel. So with that in mind, let's get back to this article. All right. Thank you for hearing me out. Sorry to be off track just a little bit. Anyway, so yeah, it's important for buyers to get off the sidelines. The number of Redfin customers requesting first tours has improved 17 percentage points from the November trout. And the number of people contacting Redfin agents to start the home buying process has improved 13 points. So compared with a year ago, home tours and requests for service are down 23 and 27% respectively, but it is an improvement from the November trout where both were down 40%. And the B word, what's the B word? Bidding war that we have seen for the most part of 2021. The bidding wars are back in some markets. Okay, all right. We're not going to be a prisoner of the moment. Okay, don't jump to conclusion. Things still have long ways to go before things work itself out. Things will move slowly. Bidding wars are back in some markets, according to this article, including Seattle, Central Florida. Yes, I know a lot about Central Florida because I own a rental property in Central Florida, and hundreds of our out-of-state turnkey investors also purchased in Central Florida. Very affordable turnkey cash flow properties in all over pockets of Central Florida and Southwest Florida for that matter. Anyway, I'll go over that in other videos. You can watch hundreds of my other videos. You will learn more about those details. And let me see what else. Market has shifted into a new phase, and well-priced listings are selling quickly. Yeah, that's reasonable. Home buyers return as power dynamics shift toward their favor. Okay, I wouldn't go that far. The home buyers, the buyers out there, maybe for the short term, you have leverage. Okay, you are in a negotiation situation, but based on my data, it's still a seller's market. There are still vastly undersupply of homes relative to the pent-up demand. All right, so hopefully you agree with me because I have hardcore data to back me up. Don't be too emotional out there. Don't counter what I'm trying to say. You're not going to win any kind of argument from me because I've been doing it for 30 years. I own many properties throughout the US over the years and have consulted thousands of real estate investors to buy in cash flow rental properties in very good, affordable tertiary markets in the US. All right. So the next word I'm really like to hear, I really gravitate towards, and okay, buyers have acclimated to the 6% mortgage rate. I like this. This is a psychological threshold. This is a big word I'm going to use for the image of my YouTube video title. People for the past 9 months, the psychological shock of a skyrocketing interest rate from the first quarter 2022 of mid 3% mortgage rate skyrocketed steadily all the way up to 7.3% in October 20th of 2022. It's a sticker shock, it's a cultural shock, is a shock to all aspects of the human behavior. But now the psychological threshold has subsided. People understand the new normal, if you will. And when the 30-year fixed rate mortgage rate goes below 6%, we don't know when that's going to happen, then we believe the psychological threshold will become very positive. So, and more people will get off the sideline. Some buyers are getting an adjustable rate mortgage. Don't freak over the word ARM, adjustable rate mortgage. This kind of loans are nowhere near the kind of loans that it was offered back in the 2008 housing crash. It's not that kind of loan, right? But I'm not here to explain the adjustable rate mortgage. To some people, adjustable rate mortgage makes sense, but many buyers out there are getting a rate buy down from the seller, especially from the builders out there, as a seller concession. I believe the seller concession will continue for a few more months. If the mortgage rate goes below 6%, the 30-year fixed rate mortgage, then and the demand pick up. When the demand picks up, because we still have a severe lack of supply of homes, at least for the builders, they're not going to offer the amazing seller concession that you're getting right now. Okay, so I'm not going to go into details, but suffice to say, right now there's so many opportunities for you to take advantage of today's market, even at 6% rate or thereabout. So mortgage rates aren't stopping people as much as they were at the end of 2022. Now that they're down from their peak, and sellers are more willing to negotiate, which I alluded to that momentarily ago. Mortgage application, another great sign. Okay, Mortgage Bankers Association, the MBA, they have reported, and Redfin validate that the mortgage application are up 28% right now from early November, as the average 30-year fixed rate mortgage have declined to the low 6% from the peak of 7.08% back in October, the largest 10-week decline since 2009. Okay, so the home affordability are getting better. If the rate goes below 6%, a typical mortgage payment will decrease by 10%, which is typically average around a couple of $100 less on a mortgage payment. So that will allow more people to afford to buy a home. So this graph tide shift. Tide shift. More. Okay, let's see what they try to say here. Mortgage rates. This is the mortgage rate. has been trending up throughout 2022, right? Up until October, it's 7.08 rate, then slowly come down since October for the past few months into the current 6.15%. And the other aspect of a tide shift, if you will, is the mortgage purchase application throughout 2022. Of course, because the high interest rate, less and less people are buying homes throughout the last 9 months of last year and this year partly. And then of course, we begin to see the upward trend of mortgage applications because of the rate has came down all the way down to the low 6. All right, so this graph pretty pretty simple to understand. So again, I hate to say the B word. The B word, we have used this B word, bidding war, throughout most of 2021, the latter part of 2020, and the first quarter of 2022. The bidding war, multiple offers. Bidding wars has caused people to overbid on homes. Some markets, such as Austin, were getting like 300 offers per house back at the peak of 2021, causing the housing prices to skyrocket 30-50% or more just overnight. Crazy. Cannot sustain that. That's why we're seeing, double-digit correction in some markets. Double-digit correction means home prices has been reduced accordingly. Anyway, so while demand is coming back in some markets of the country, it is selective. Home or eliciting bidding wars tend to be affordable, suburban, single-family home, move-in ready, and most importantly, priced competitively. So most everything else is sitting still in the market. So yeah, and there's some small upticks in Seattle and Tampa markets this month. There are other markets that are seeing some bidding wars. I know them, certain parts of Texas, Central Texas, and certain parts of Central Florida and Southwest Florida, based on my direct information from my team in those markets. They are telling me that. So different pockets of the US are seeing some small uptick, and we will continue to monitor this kind of information. By the way, there's no such thing as a national real estate market. Real estate market is very super hyper local. Every region, every metro, every city, every neighborhood is different in many different ways. Okay, real estate market is local, down to the block, down to the neighborhood. So yeah, bidding war or steadily coming back, especially on a nice location, nice homes, good school district, the whole 9 yards. And in some select markets, we have seen 16, 17, 23 competing offers for one house, some place in Florida. And I know where it is. I know where some of those locations are, because my network of realtors on the ground that are selling those rental homes to our out-of-state investors. I connect with them. We have a good referral network. So I know from a high level in many markets what's going on in real time. I'm not an expert in any one market. So I'm not a local realtor for a specific market. I'm a real estate investor, real estate advisor, advising a lot of my investors to buy in several markets throughout the US, mainly in the Midwest and South and Southeast. So, okay, so some of these articles, as I conclude this video, yep, pockets in Florida, they're receiving multiple offers, but it's not nowhere near 2021. We will never see 2021 ever again in our lifetime, according to my opinion, because there's no way we could go back to 3% 30-year fixed rate mortgage and low supply of homes. I mean, this amazing run up in prices in the past couple of years is just it's an anomaly, once in a lifetime occurrence. So that's my opinion. All right, so I think yeah, let me conclude this. So yeah, we're still at the seller's market because right now the supply of homes nationwide is around close to 4 months of supply. So we are kind of in a border, still technically a seller's market. That means sellers still have leverage, and still look, there's still a very low inventory of homes available. I don't, no matter how you cut to the chase, that's how it is, right? And the pent-up demand will continue to happen. So the demand will soon way exceed supply. So right now there's very little competition. Whether you're a primary home buyer or investor, right now it's really good to pull the trigger, even at this current interest rate, if you will. But hey, when the interest rate gets lower, when optimism still is going to occur, when frenzy may happen again, bidding war may happen again in a larger scale, then if you wait too long, you be competing against other people. You're gonna have no choice but to bid up on the prices that you want. So be smart, be a contrarian thinker. All right. So that's all I have to say. I have to go now. So this the recap is I see the trends, I see the data. So you gotta get off the sideline, whoever you are, put your financial house in order, work with your team of realtors and financial advisors, get pre-qualified, do your research, do due diligence. And with that in mind, if you see value on this video, please smash the like button and subscribe to my YouTube channel. And finally, as I keep saying all the time, subscribe to my free email newsletter on the website below, and then you will become a part of our free member of our real estate community of our network. So you have access to free real estate education. There's some real investment opportunities for you to access within our network. And so that's pretty much it. All right, thank you so much for attending. I will see you on the next video. Have a nice day. This is Steven. Goodbye.